All right, many of you guys are asking, how do mortgage rates change from day to day or throughout the day? And it's just like your 401k or your stock portfolio. Mortgage rates are tied to mortgage bonds that are traded on Wall Street. And as the mortgage bonds go up, that yield increases and that pushes mortgage rates down. And when the mortgage bond yield drops, that's what causes mortgage rates to go up. And what you're looking at here are the individual candlesticks. Every one of these marks represents a day. And a green mark represents where mortgage yield went up, and that means the rates went down. A red mark is a day where the mortgage rates, the yield went down and mortgage rates went up. So you can see how the rates have had so much volatility, and that's why we see the rates change from day to day. Now, if we zoom out for a year, we can look at how much volatility we've seen throughout the last 12 months. And you can just see the roller coaster of a ride. And again, every one of these marks on this chart, green and red, represents a business day and a open day of trading on Wall Street and how the mortgage bonds performed. And again, a green candle means the bonds improved and rates went down, and a red candle means the yields decreased and mortgage rates went up. So you can see how it's all working. Finally, in this chart, you can see back here in 2021, when rates were still in the threes, right before the Fed announced that they were going to stop buying mortgage-backed security bonds, which kept mortgage rates artificially low for an extended period of time. And then once they did, and inflation was also taken off, the mortgage yield on the bonds started to drop, and normal supply and demand had to take over. And as the yield on these bonds dropped, that's why mortgage rates started to shoot up and spike. And you guys know the rest of the story there. And they just continued to climb and climb and climb as the bonds continued to lose yield. And again, as the bonds lose their yield, that's what forces mortgage rates up. So as we watch these individual candlesticks on a given day, these red marks are bad. And as yield goes down, mortgage rates go up. Green marks, when yield goes up, mortgage rates go down. All right, I hope that helps a little bit. I know it's a little counterintuitive, a little backwards, but you know what? Don't blame me. I didn't make it. That's how the system works. But if you got a question or want some more clarification, just direct message me and I'll help you out however I can. All right, y'all have a great day.